fuck you. They did say within 24 hours. Well, that was within like 4 hours.
Yep. So, hello, Alpha Traders. We are live on YouTube, and what the bonk is fucking going on? What is this crazy coin? It's got everybody's attention, that's for sure. Going bonk crazy. What are you gonna do? Oh well.
It's a magical Solana community coin. We love it.
It's exactly what it is. This is in Solana's pumping, leading the alts right now, I believe. Well, I mean, I didn't dig too deep into the shitcoin realms, but obviously Solana's not a shitcoin. It got captured up in the FTX debacle, but it's fine. And then some devs were like, "Hey, let's create a community meme coin for Solana. It sounds good." There's a hell of a community behind Solana, number one. So everybody that was bashing Solana, hey man, I don't know what to tell you. Getting Solana around $10, good deal. Not financial advice. I was sure buying. Got airdropped a free token called BONK. BONK. My original BONK right now was worth 300 Sol. But there'll be people out there that'll clown it and shit and say, "Oh, it's stupid," or blah blah blah. It's, hey man, it's magical internet money. If you I don't know how long people have been in crypto. This is why we're here, baby. Because it's insane. There's insane gains sometimes. There's also insane losses if you don't know what you're doing. Right? You got to take your profit. Now, when I said my original bonk, because I chipped a third off the top, took profit. Yeah, what are you going to do? Got a couple billion left. It's worth 200 Sol. 200 Sol right now. Sol's high was what? $300 or something? It's looking good. Pretty wild. Gotta love bonk though. Wish we could pull up some charts. I've actually got, I've got some, one thing. When there's no trading pairs for a new token that is in cryptocurrency land, dude, you can go to Bird's Eye. It'll have all these DEX listings. Throw some volatility bands around it. This isn't something we use at Alpha Trading. This is Bollinger Bands, right? If you don't know about John and his bands, hey man, for what they do, they work. They work, literally. I mean, you can look at the chart right here. It's all about standard deviation levels. Now, this indicator isn't made with the correct math. Hey, you know what? When you don't have any other tools to use, right? Because they're drawn from TradingView. There's no TradingView pairs, though. So you can't actually pull it up on TradingView on your account. But you can go to Bird's Eye right here. You can throw Bollinger Bands around here, and you can just see the magic. Right? You can see the magic. You can see bonk went up, hit a 4th SD, comes back, mean reverts, goes up, hits a 3 SD, finally drops down below the mean. That's where does it go? Third standard deviation to the downside. Worked its way back up above the mean of the bands, got up about to the 2 SD, found a little support on the mean again, actually dipped down almost to the 2 SD, and now look, it's running again. Went up to the 4th SD. I was looking at it when I woke up going, okay, this baby's going to come back down and mean revert. Sure could. Still can. But when you don't have a lot of tools to use, always dig in here. Look for volatility tools, right? If you're in here using RSI and stochastics and things of that nature, dude, it's not giving you any information that's helpful at all. Zero help. Throw Bollinger Bands on here. Period. That's all you really need.
Two things about that. Just to keep in mind, because what Bilbo's saying is very useful. One is always remember Bollinger Bands are basically SMA 20. Or keep that in mind, right? That's what it is. It's measuring the SMA 20. Second thing is you can use tools like you said, the Bollinger Bands, and you can use even the simple standard deviation tool on that chart, which is just pull up standard deviation. It's not, a great tool compared to our deviation bands, obviously, or anything like that. But it is better than not having anything and just looking at naked price candles. So you can definitely use some tools, but just bear that in mind. They're made differently, obviously, but it's not like you have nothing to go with. It's just bear it in mind, and don't be greedy. like he did. Like Bilbo even said, man, he even took a third of his BONK, his profit. Why? Because if you just sit on it and then it dumps, you're going to be crying on your loss. What's the point of that? Make a good profit, take your profit, man, and then continue to the next trade.
So I was talking with somebody in another Discord, and they're like, they thought it was bullshit. And they're like, well, what's a use case of BONK? I was like, I don't know. What's a use case of Dogecoin? What's a use case of SHIB? There isn't one. It's a fucking community meme coin.
Yes.
And so
the use case is profit taking.
Why people are looking, right? Why people are wondering, the market cap for Doge is $9.5 billion with a B.
Mm-hmm.
So if you ever have to ask, well, why do you think this will do that? Why do you think that'll do this? Things of this nature. I don't think it. Look at crypto. Crypto's crazy, man. It's community driven sometimes.
Yeah.
Solana's community has been beat up, right? The entire Solana community was dragged into this mess with FTX.
Yeah.
It's a great blockchain. Tell you what, man, look out.
And there's no like, as a trader, you don't need to think about long-term fundamentals and things like that. If you're in short-term trades, those things are irrelevant. They're totally moot. Like, it's not, the only thing you might need to be concerned about is if something hits the fan and suddenly destroys the coin because some, piece of news comes out that, destroys all the faith people have in the coin or whatever. But if you're in short-term quick trades, honestly, that shouldn't be a problem. And if a coin tanks, and you're in an active trading session and you're trading that coin, be monitoring the Twitter about it or whatever news, engine is touting the noise about that particular coin. And then if you're in a fast trade anyway, you should be in and out of your trades quickly. And if anything, if a coin starts to tank, ride the short and take the profit when it bottoms. Like, it's not, it's not rocket science.
No, it's not.
Yeah.
Here's
Very good points, my dear friend. And Happy New Year to all.
Happy New Year to all.
This is our first live stream on the YouTube since the new year, right? I think so. Or no, it's our second. We did one yesterday, right? I forgot. Time flies, man. Time flies.
Yeah. Yep, it does.
Yeah.
Let's look here on the 4-hour chart. So on Solana on the 4-hour, Z-score log returns pretty high. You can see, kind of makes sense. Look where it's at on the projection. Right? Look how these areas, look how the levels are getting hit. Let's see what's up here. 12.5. This is the this is actually when Solana's making a move like this. This is the 99.7 Laplace distribution range, right? And when you hear these probabilities, there's a 99.7% chance, right, that these 4-hour candles are not going to close above this level. Right? This is why we use this. Now we could actually, because this is a little stretched out. Let's move this baby. Let's see, where would be a good spot after that little pullback there. Yeah, you can see it's found support up here above the 95.4. All right, this is the 95.4 Laplace distribution range. So if it wants to make a run on the 4-hour from, and this is what usually you want to do, right? You get a little pump like this, and you start going sideways. Look for the new move, right? You got to put. We could almost. Not almost, because I don't like to have a bearish candle in between. This is a little, this area right here, this is a little tough to set it up. You could almost actually put it on the down move and see what's going on, right? You can see this down move found support on the bottom side of the 68.3 Laplace. Started creeping up, right? Opened up right on the mean of the projection, then launched right through the 95.4. There was a 95.4% chance this candle would not close above this level. Now look, we're doing it, right? And this is how I will evaluate moves like this, and obviously not just looking at one indicator. You got to know how to read these returns indicators to see what's going on, especially divergence, right? The divergence between price action and returns is going to tell you a lot. But now we've closed actually that one closed below. So we've closed 2 candles above the 95.4. If Solana wants to make a rip on this 4-hour projection, I mean, we're talking $15 Solana. And there's no doubt in my mind Solana's going to crawl out of this hole. People that are fading Solana, man, I don't know what to tell you. Same thing.
Yeah.
people that are fading the Catalina whales, right? I've been trying real sneak. I mean, I'm not trying to give financial advice ever, but there's a lot of things going on behind the scenes that can't be talked about, and there's a reason why. These guys are in the entertainment industry, right? Right? They're putting together major deals that can't be spoken about, right? Because of the fear of the other party pulling out, right? These big companies don't want everybody knowing what they're doing until they make the splash. And I'm
It's also
telling
the Howey test, right? You don't want, I mean, projects that are smart are not putting themselves in a position to fail the Howey test. And those that are not so smart, that are usually run by amateurs or who don't even know what the Howey test is, are making promises that they can't deliver on, and then they're getting in trouble because they're giving people the expectation of, you know, benefits or gains from the work of others, and that's a no-no in SEC land, right? And in CFTC land, you can't do that. So smart projects don't make promises. They just say, this is a really interesting project, and here's what we have done, and this is what, you know, is happening, but we don't promise you anything that's happening in the future, and what happens happens. And the smart projects are the ones that stick to their milestones and goals and all that stuff, and then they just deliver one deliverable after the next without having to be, you know, called a security, because they're not offering people a, you know, promise of gains from, you know, from the expectation of work of others, because that's one of the big legs of the Howey test.
Yeah.
So there's a reason that smart projects like Catalina whales or other projects don't promise things about the future expectations. They don't want to be stuck in a bad trap.
No, they're doing it right. And I'm telling you what, they got lawyers, right? They spoke to everybody. They wanted to make sure they did this right, because they're coming over. They're coming over from Web 2, right? Trying to bridge this gap into Web 3. And one thing that you're going to see in the future, mark my words, all these NFT projects out there that have their little tokens, good luck, man. You're going to get nailed. You will get nailed. If I was in an NFT project right now and they have a token attached to it, I'd be taking my profit and saying bye. Don't think they're not going to be getting a little knock on their door, man. Dude, yeah. They're taking these non-fungible tokens, right? They're creating a freaking, pretty much for their project, just a meme token. Man, it's going to be a security. These people are going to get in trouble. I wouldn't want to get wrapped up with it. I'm not trying to throw shade on any of these projects. I'm making the point where the founders of Wagme Beach and Catalina whales, they're doing it right. They're doing it right. And because they're doing it right, most people in Web3, crypto, everything, they want everything so fast. Got to have the returns fast, even though most people don't even know what the hell returns are. That's what's hilarious. But anyway, they're doing it right.
And like, that's a very good point, man. Like, again, there are tokens that are community tokens or whatever that are not securities, because again, they don't fail the Howey test, right? They stick to the rules. But a lot of projects, and probably most projects that are in this space, are definitely, at the very least, suggesting potential gains from the expectation of work of others, and that is a big no-no. And they're for those reasons, what Bill was saying here is absolutely spot on. Like, they will be taken down one at a time, especially if they're running, you know, within jurisdictions governed by the United States.
Yeah.
So it's a if you're investing in these kind of tokens, you got to be careful. Like, you could be in NFT projects that are not doing that, and they're just running straight up on a regular NFT project on a good blockchain and not have that problem. But if you're running into projects that do have their own little tokens, or that are in any way, shape, or form, you know, suggesting gains from the expectation of work of others, you're asking for trouble. It's worth doing your research and knowing what you invest your time and money into, especially if it has to do with crypto, because, you know, the regulators are all looking to get a piece of it, and they're definitely going to go for the little fish and the low-hanging fruit first, because that's what they do.
Yeah. Oh, yeah.
Bear that in mind, for sure, man. Solid advice, my friend. Solid advice.
Yeah, just be careful.
Not advice. Solid know-how. Solid knowledge.
Yeah. Been in crypto since, I don't know, not a super long time, but 2016. That's a lot longer than most people have been in crypto. You know, a lot of, especially these days. There's a lot of, there's a flood of people coming in, right?
Yeah.
So even after what just happened, I mean, it intrigues people. Like, what the hell is going on over in cryptocurrency? Well, let's go check it out.
Right.
Then literally on Christmas Day, I didn't look Christmas Day, but the day after, I look at my wallet and I'm like, okay, what the hell is this BONK? And why the hell is it dropped in my ledger addresses? And I started thinking, I was like, wait a minute, man, it's where my whales are. I was like, what's going on here? And the founders of Catalina have an in with the devs. Whoever the devs are of BONK, right? We're getting a lot of information going on. Especially people that got shorted their BONK. They're taking care of it, right? People will get their BONK. So everybody just needs to chill. It's funny how people come out of the woodwork when a meme coin gets airdropped. You know, nobody ever interacts in the Discord. And then all of a sudden, because a meme coin drops and people are making money, then people come in, hey, what's this BONK? Hey, what's going on? It's like, I don't know. Where the hell have you been? Are you part of this project? Why don't you interact some more, man? What the hell? You just going to come in and start asking about some meme token instead of coming in, hey, whales, how are you doing? What's going on with the project? No, they don't do that. They just come in out of the woodwork. Hey, I didn't get my BONK. Are we supposed to get BONK? What about BONK, 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 BONK? It's just crazy, man. The way people are driven. It's just like, oh my goodness gracious. But not everybody's like us. I mean, I'm in front of these charts all the time, right? We're always diving into stuff. But if you're involved in a project, give it some energy, man. Right? And I'm talking about any project that you're in. Anything you have passion about in life. Be involved. Don't just sit back. We're going to have a little passion party by yourself. No. Get involved. Enjoy yourselves. Especially have fun. If you're not having fun trading and you're creating all this anxiety for yourself, oh my God, I didn't get all my BONK. What's going on with BONK? Holy shit, should we all have BONK? It's just crazy. It's like, just relax. Right? Yeah. Just relax. Because it's crazy. Crazy crypto land. And then you look at something like BONK, right? You look at the chart and you're like, what the fuck is going on, man? I mean, this thing has just been rising and rising and rising and rising. Right? A lot of people are figuring it out. There's a lot of people fumbling the bag. Now, if you know how to simply just read simple volatility, right? Not like Yasha said, right? It's built on the 20 SMA. But man, these things, if you got nothing else to use and you understand how to use this indicator, you can create a bigger stack of BONK, if you know what I mean. Wink, wink.
Yeah. I mean, you know, if you look at the chart of what you have right there, like there's plenty of profit taking opportunities there and plenty of rebuying opportunities right there.
Yep.
There's no shortage. If you're interested in trading that, I'm not personally trading that coin, yeah, but if I was, there's no shortage of hills. And you can run them up, take your profits, run them down, take your profits, and keep doing that cycle and build your stack up. It's kind of coin you want to trade.
Yeah.
You know? And there's no shortage of coins, there's no shortage of projects, there's no shortage of assets to trade. Use the tools at your disposal. We have the best tools, I think, on TradingView, obviously, I think, but when those tools are not available on these kind of external charts that people put on other sites like Bird Eye or whatever, then use the tools that are available and, you know, go with the best that are available. And okay, Bollinger Band's not perfect or anything, but it is better than nothing, and standard deviation also is, you know, better than nothing. And you can at least get a read from those tools where you should, you know, you may not get the very best entries and exits, but you'll get decent ones if you know how to trade, especially if you have our tools, you know how to trade volatility with our tools, and you've been, you know, using our tools for other assets, you'll understand very quickly how you can align the kind of concepts to even using this sort of these sort of tools. They are limited, but they do work especially if you know how to understand how to create volatility and take your profits.
Yeah.
Absolutely.
And why I was talking, Sol pumped again. Sol when we started was up 5%. It just said it was up 10%. Just had another pump. There's people buying Sol. I've been saying it for a while. Don't be surprised if Sol is going to rip back up to 30 real fast here at some point. Let me see here. Excuse me. Let me see.
Even Sol at 20. I mean, that's 100% gain from what it was some days ago, like 5 days ago when it was like 9 something.
Yeah.
You know?
100%. If I drag this in, here's what I want to show you. and what you're looking at here, right? I know this to somebody that doesn't understand what they're looking at right here, which probably a lot of people don't. These are price action volatility ranges and distribution levels, Laplace and normal distribution, right? And you can see right here, this is a great day. So Solana opens up the day, comes down, this yellow cross line, that is the center of the new monthly range, right? January 2023. You can see Solana comes down. First, it goes up, rejects off the top side of the 68.3 Laplace distribution range, comes down, sends a wick down to the center of the monthly, but we're talking 1, 2, 3, 4, 5, 6. Over a 2-hour period, never closed a 15-minute candle, not only below the center of the daily range that's right there above the monthly, but the bottom side of the 68.3 Laplace. Not one candle closed below that. Why? Well, there's a 68.3% chance that that's not going to happen. It can, and it can start moving down into lower distribution levels. But you see something like this, and then you're evaluating the other indicators, especially all the returns indicators, you're going to see this bounce getting ready to happen. And what's it do? It immediately goes up. The blue cross line is the first standard deviation normal distribution. First, you get a wick right into it, pulls back, closes the candle, right below. Now, this is a weekly. Look at the tight weekly range down here, right? And you can see on Solana the other day. Look what happened. Solana opens up the week, comes down, tests the weekly range. It's all history from then. Solana's been pumping ever since, which is fantastic. I'm a soul believer. It's very nice.
You wear your soul patch on your sleeve.
Got my soul patch on. Then runs up. This white cross line, that's the 95.4% Laplace distribution range, right? Now this is a no-brainer right here. You talk these are all profit-taking areas. If you were scalping low time frame volatility, and then you see the data set finding support right here. It doesn't drop down below. This is the first resistance level of Solana's new weekly range. It's looking like it's feeling pretty comfortable up here, right? Got back up above the 1 SD, making another run at the 95.4 Laplace. One more swoop down, then boom, right up, right? Second standard deviation normal distribution. So when it comes to normal distribution, there's literally, and these are daily ranges on a 15-minute chart. So when I say there's a 95.4% chance that Solana doesn't close above here, I'm talking about a daily candle. So you can get wicks through here, you can get candle closes above here. But when it comes to the daily close later on, 7 p.m. Eastern Standard Time, I don't think we had the time change back. I don't even know. Time is irrelevant. But anyway, I wouldn't be a bit surprised to see Solana run up here close to $13, right? 3SD. That's a third standard deviation move, and there's a 99.7% chance the daily candle doesn't close above there. This is why we use probabilities, right? The VEPS, man. Volatility, entropy, probability, and statistics. There's not a lot of people out in the trading ecosystem that are trading like this. You know who are, though? The high-frequency trading firm algorithms that are literally creating everything you see in these data sets, all these movements. It's the algos, man. The algos trade math. I don't care what, you're going to have YouTube Jimmy after YouTube Jimmy out there telling you that these algos are running off Fibonacci levels or moving averages or whatever other silly stuff they want to talk about. It's just not true. And we can prove it time after time after time after time again by showing you the distribution, right, of where the big money's trading, moving these markets. Retail traders are moving these markets, man, right? There's just, yeah. It's just not going to happen. It's these big algos. And if you can figure out how to understand, how to like get a glimpse into the future of what these algorithms are thinking, right? Because humans are programming them. And the humans that are programming them with good math, right? Mm-hmm. We know because our indicators are programmed with good math. That's what separates alpha trading from a lot of other people creating indicators out there. There's only one other one on TradingView that is correct. The others are close, but they're missing one important part that we're never going to talk about. No offense to all you out there struggling with the math, right? I struggle with it. Thank God we have Van.
Yeah. Thank God we have Van.
And Donnie. Yeah.
They're great tools.
And because Van is, I'm sure, has Donnie's math is probably bumped up a few notches. Mine have.
Sure.
Mine have.
Yeah.
And I'm not even in the code. When it comes to code, you know, I can do some spell checking and make sure that the titles are correct. And other than that, I stare at that code and I just go into the matrix. Or I cannot compute. I cannot compute.
No, but, I mean, you know, they use solid math that are forward-looking, and that's why our tools are as efficient as they are, because, you know, they are leading indicators as opposed to lagging indicators, which is what everything else is built on in the price action model. For the most part, you know, like all the price action indicators that traditional technical analysis uses, they all look at basically information that was as opposed to information that is and is going to be.
Yeah.
We look at information that is and is going to be, because what matters when you're trading, right, is knowing what are the probabilities and statistics of the move, you know, going your way now and in the future, as opposed to what happened in the past, which is effectively irrelevant for most trades. If you have access to better tools, why not use them? So
Yeah.
that's what we do. We have those better tools and we use those.
I'll give you a little example on this 4-hour chart right here. I mean, you can see obviously this recent move right here, volatility fell off a cliff, expanded, positively correlated. Our prediction model flipped right back here when Solana was going sideways, right? Heading back in to where price action is totally random. If you see pink, purple, right, in the area, price action's random. Look what happened. That entropy turned down. This move started trending, and now it's right down here at the second standard deviation band. Right, look over here. We're having an outlier on this 4-hour candle. Right, this is a variance indicator. Right, what is variance? And if you're watching this either in the Discord, on YouTube live stream, whatever, if you hear words you don't understand, write them down. Even get in the chat. What was that word you just said? Right? Google it. Research it. Right? Help yourself out a little bit. Because variance is a spread of data around the mean. Right? Within the distribution of returns. And so is what we've created here is when this variance starts to rise, we have correlated it to price action. And regular variance has a white line. When that inside line turns pink, that's literally telling you right there, even at the beginning, hey, there is a fat tail event within the distribution right now. And a fat tail event within the distribution is a second standard deviation move or more. You're like, well, how do you know that? So here's what I'm going to do. Let's put right where that outlier started. And it's perfect because it's right there. Boom, that's a nice little bullish little doji there. I can start this projection on. I'll show you what I mean. Let's turn on that PB2 again. Bloop. Is that normal? Yes. Now let's move this baby up. Where are you? There you are. So if we start this projection right here. Here is the 95.4 Laplace distribution range, which is a probability. It's a second standard deviation and normal distribution as well. But look at the wick. The wick almost went to 99 percentile range. Got a wick through the 99.7, right? Did this 4-hour close above this 99.7% Laplace distribution range? No. There was only a 0.03% chance that it would. So then it goes sideways again. Right? Then it goes sideways again. Now we're having another outlier. Right? Now look, having another outlier right here. So you can literally, this is how we do profit taking. Now this is a 4-hour. All right? This is a 4-hour chart. Oh, I moved that. We don't want to do that. Let me get rid of that. Let's move this up. There we go. Yeah, because where did that outlier start? Just on this candle? Let me back right up again. Actually one back. That's okay. Where are you?
But just to reiterate, for anybody new here, when we say 99.7%, it's obviously top to bottom on that range. So if you just go from the mean to the top, it's half of that. So the possibility or the probability of closing outside of that is 0.06% just to the upside, right? But it's 99.7% chance top to bottom that it's going to close within that 3 standard deviation band. So keep that in mind.
Yeah, 100%.
You know, it's, again, 0.06% chance is still very, very low.
Two. What? Let me see here. Why is that bad boy? Oh, I know why. Hold on here. Let's turn this drifty off. Dun dun dun. Yes, there we go. Market. There we go. So let's see here. Boy, why is this thing giving me a struggle bus? I don't know. There was the 68.3 Laplace. Here's the 95.4 right here on the current candle. Yeah, I don't know what's happening here. We're having a little bit of a data error. It's okay. It's okay. I'm just proving the point that when you're having an outlier, dude, you're going to have a second standard deviation move or more. Then you can literally put our projection box on there. Look where the price action is at that level. It gives you a great place to take profit. Right? A great place to take profit.
Yep.
It's incredible, especially if you have the VRE too. You know,
and you know, people will say, "Well, there's forward-looking indicators in traditional technical analysis." Yeah, but they're all based on
price
things
action.
that are looking at lagging information, like SMAs or EMAs or what RSIs or stochastics. So they're all giving you lagging information about the forward-looking projections.
Yeah.
Whereas our information is based on actual probabilities of the current standard deviations and the current Laplace distributions. So that's why our information is basically more up to date and is what we call leading information.
Yeah.
And it is actually leading information as opposed to, in theory, forward-looking information. So,
all right, traditional markets.
Many quantitative models make that mistake when they show you that stuff on YouTube, but that's because those are not people working at actual HFT firms. Those are just math people trying to figure some stuff out based on the tools they have available on TradingView, because they're not aware of our kind of tools.
Yeah.
Yeah.
Right here, you can see Solana's data set, man. It's getting really comfortable up here above this 2SD. Actually, we got a wick down. What is this little red line right here? Here's the daily range. That's the first resistance level that has flipped support here on these volatility price action ranges on the daily. So you send a wick down, liquidity was right there, whoop, bought it right back up above the 2SD. Now we're dealing with 4-hour distribution levels though. There's the 68.3 on the 4-hour right up here. That's the 95.4% Laplace distribution range on this current 4-hour candle. That's what the skinny lines are. So I've got 4-hour and daily distribution levels on here. We got there's this 2SD on the 4-hour. So the 3SD or the 99.7 Laplace on this 4-hour candle's up here at about $13.40. But right now I'm looking, so you can go 4-hour to daily. And if this thing gets up above the 95.4 Laplace on the 4-hour, it damn sure could start running to get up here to the daily 3SD. There's no doubt. I mean, this is how I work the distribution anyway. Use the 4-hour and the daily together on a 15-minute chart. There's a lot of information here. A lot. And wow. Right when the market opened, crude dumped. Good, go down. Show us at the pump, baby. SPY though, where are you? There you are. So pre-market gapped up above the 68.3 Laplace on the daily. Gotta love it. Now, here's the thing though. Closed right there, opened up, gapped. Yeah. So we got the top of the new weekly range for SPY at about 381. That's also the top of the new daily. They're literally right on top of each other. Did this area get tested? No, we literally closed above both of these levels coming into Tuesday today, right? So when I look at something like that, I'm like, okay, this area is probably going to get tested. Although it wasn't too far off. When it's something like this though, and you just gap away from it real quick, very high probability this data set's going to come down and at least test this level, right? 381, 382 level, right in here somewhere. There's a lot of liquidity in here. We'll see what happens, but that's usually the case. Usually the case. Meanwhile, Solana's making its little run here. Bitcoin making a little run here. Tesla's doing what Tesla's doing. Gave everybody a little hope at the end of the week. I'm sure a lot of people, I didn't touch it with a 10-foot pole yet. It's all fishy. A lot of people were buying calls, selling puts, right? Trying to get this Tesla move back to the top side. Look what Tesla does. It pre-market gaps down. Now all these people, especially in options, they're crying. They're like, oh shit, what's happening? So yeah, pretty crazy. Gotta love the markets. Gotta love the markets. Now where is Tesla's? Let's see here. Where are you at? There's at the weekly. Yes. Hold on. No, that's. Let me see. Oh, there's the top side of it, I bet. Let's see. Let's see. Holy crap, is this thing? Man, is this weekly range just super tight right here? Hold on here, man. What is happening? Where are you, little range? Where's my little yellow dot? There it is right there. That's the center. So it gapped down. Tesla gapped down, opened right below the center of the weekly. The bottom of the weekly is down here right at like 116 something. It's buried underneath this little pink candle. Tesla's riding down. Crazy. So yeah, it gapped down below the bottom side of the weekly. So Tesla, that's not a good way to start the trading week. That's for damn sure. That is for damn sure. That's sticking out. Crypto looks like it's having a little fun. Yes, it does. And the dollar's coming back down, right in the middle of the night.
On the daily and also on the weekly, it's tight range.
Yeah. 0300 hours. Boom. The dollar rips up through the monthly range. This is the top side of the dollar's monthly range right here. Here is the weekly range down here, which you got the weekly below the monthly. The daily's probably down here too. Yep, daily range down there. So here comes the dollar pouring back down. Now, if you don't get away, that's the thing with data sets. These weekly and monthly ranges, if the data set doesn't put a lot of distance between itself and that area, man, they are magnets. They are magnets. They usually love to come back down and revisit it. That's why when you understand the distribution and these volatility price action levels, man, put a feather in your cap. Put a feather in your cap. So let's see.
Yeah, dude.
Popping out.
Do we have 0.01% daily range on the VRE of Bitcoin? I mean, you want to talk about tight. That is tight. And there's a reason it's having a few nice trending moves today.
Yeah, here it is. Yeah, what is that, 40 cents?
It's some ridiculous things.
Yeah. On an asset that's worth almost $17,000, the daily volatility range is 40 cents. And we know.
$2 range or something. Well, which index you looking at?
Oh, yeah, right. Well, I was just looking. Yeah, it's $2.
I mean, it's still 0.01%.
$2.40 range.
Yeah.
And check it out. This is interesting because here is the weekly range for Bitcoin, right?
Yeah.
So let's go back over here. When the week started, Bitcoin nuked up through it, right? But like I said, if you don't put a lot of distance between it, this area will get revisited. Did it right at the daily open today. Whoop! Got a couple candles right down to the top of the weekly with this tight daily range. So right here, if you're reading this, you're like, oh, Bitcoin, you better get back up above this daily. If Bitcoin would have started rejecting here, going sideways during a couple 4-hour candles, it could have really dumped down through this weekly. It looks like Bitcoin woke up today and chose violence, though. Violence on the bears. So pumps off the daily range. Let's do this. Boom, boom. Sends a wick up to that 4-hour 95.4 Laplace. A wick right to it. If you see that wick right there, right to that little white line. Bam! Rejects, drops back down in the daily 68.3 Laplace. Wait a minute here. Where has my little dog gone? Where is... Give me a second here. Is it that wide? Wow, it is. 68.3 Laplace range is pretty wide, but I have this expanded, so it's not that wide. Here we go. Got back up above the top side of the 68.3. And so when you get a tight daily range on this indicator, it's literally telling you that data set is going to trend today. Doesn't give you direction. That's what our other indicators are for, because we correlate them to price action, and it will give you direction. So you see a tight range like this, you're over on this chart, and you're over on the, where's the Bitcoin chart? Let's pull it up. Crypto. Boop, 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 boop. There you go. You're over here on this chart, right? You're looking for outliers. You're looking for divergence between price action returns. You're looking at these fissures, right? What are the fissures doing? You're looking, are we trending? Trying. The predictor flipped again. That's for sure. Volatility, interesting. I would have to pull up the other correlations for these other volatility reads, to be honest. The low length is a little choppy right now, a little choppy. So I would definitely revert back over here looking at variance. Where's the z-score log returns, which it is pretty high, right? But when you see the log return z-score coming down, the BTC data set, the price action going up, I like to look at it like a bull reset, right? Let's see. And you can see right here on the 4-hour on Bitcoin, just like Solana, starting to have an outlier. And it just started. Right, it just started. So this thing could move. We could see this. Let's go back over here. And when I'm trading, this is what I'm doing, man. I'm all over these charts. You got to know how to use all these together. So where is Bitcoin's 1SD? Well, here is, let's see, is that the first resistance level for the monthly? Probably is. Where? Oh, actually, that's the bottom of the monthly. My bad. Yeah, it's a big range, too. If I remember correctly. Where are you, baby? Yeah. The center of Bitcoin's monthly range is at 17,000. Look for this area here at some point. Probably to get nabbed. Especially if we have this outlier. Yeah, 17,058. That's the center of the monthly. Which the data set is approaching the bottom side of that monthly range right now. Here it is, right here. Boom, boom. It's at about... Let's just be safe, say 16.8, all right? It's at 16,793. You see BTC's data set get up to here and start closing 15-minute candles inside this monthly range. The center is going to be like a magnet, right? And so I'm looking at these deviation levels. Here's the 1SD, 16.9 on the daily. Not a problem. Can easily get by there. It's when you get up to like 95.4 Laplace. Here's the 95.4 Laplace on the daily, a little bit below the monthly. So I can see a wick coming up, testing this area, but there is a 95.4% chance the Bitcoin daily candle does not close above that area. Now crypto, dude, it happens all the time though, right? Cryptocurrency is pretty damn volatile, indeed. But you got to stick with the probabilities. Got to know what you're doing. Now with the dollar dumping right here, the way it is, now it's back down to the bottom side of the monthly. Could get real interesting here for crypto. Yeah, man. You want to see that dollar dump. Want to see...
I mean, in line with SPY, right? And also SPY has a tight range today. So,
yeah.
You know, these things, not all assets are always correlated, but big assets like SPY and Bitcoin are very often correlated. And they very often do the opposite of what Dixie does. So, because that's the natural tendency of assets that trade against the U.S. dollar, obviously.
Yeah, for sure. And this could be. Let's see what Tesla does. This because the S&P's having a little party right now.
Mm-hmm.
Is Tesla gonna fucking just drag NASDAQ into the dirt? It did last week. We'll see what happens, man. All right, boy. He lost a lot of money, hasn't he, old Elon? His wealth just fucking.
Does it really make a difference if a person has 100 billion or 250 billion? It's still more money than they can ever spend. But yeah, I mean, no, you can spend it, but it's still more money than a person necessarily needs, right?
Yeah.
So,
to him, no. He lives in a boxable. I mean, come on, man.
He lives
in a boxable. He makes me want to buy one. Throw one on this property.
Right.
It's pretty crazy.
Does have other houses, but he just chooses not to live in them.
I thought he's fucking sold a bunch, right?
Maybe, but he still owns a bunch of properties.
Yeah, from what I understand, he sold most of his fucking houses. He had like 7 or some bullshit.
Yeah, he had a bunch. I'm sure he sold a bunch or whatever, but like, you know, it doesn't matter if he has one or none or many. Like, it's not like he's lacking for cash.
Dude, I wouldn't even own one. If I had that kind of money, I'd be Airbnb-ing everywhere I go.
There you go. I think last I heard he was crashing in some friends' houses and stuff. Like,
Elon's couch surfing.
I I think Lamar had him in a guest house or something at some point.
Right.
Like recently.
Right.
You know, he makes the rounds. He visits his friends and stuff. He's enjoying the life, I guess.
All right. Let's take this off. Here.
That is neither here nor there as traders. We look at the numbers.
For sure. So here, we did this. We did this yesterday. I was doing some like end of the first quarter projections. This is the Laplace distribution range. This is our projection boss, right? This is PB1. This will project from the current candle on continuous markets. And we are working on getting PB2 to do the same on non-continuous markets. That's what we need. But here is the end of the first quarter, 2023. Right, here's some probabilities. You got the top side of the 68.3 Laplace. You got a $13.87 Solana. The 95.4 is up here at about $73.20. Man, he shifted a little bit for whatever reason. That's close enough. The 99.7 Laplace distribution range, $780 Solana. All right, that's at the end of the first quarter. Obviously, that's a hell of a move. And right now, we're starting a distribution. You can see what's going on here. We're almost at that little pink dot right there that the dotted line's coming out of. That's the projection of the 95.4 Laplace into the future, right? All this is the distribution, man. That's all this is. You remember the bell curve from school? This is what you're looking at. You're looking at a bell curve. This isn't the bell curve of normal distribution, but it gives you an idea of what you're looking at because people get confused on what this is. Dude, it's just the distribution. Right? Look at a Monte Carlo simulation. That'll blow your mind. They do random, like 10,000, 100,000 random events in the data set. They all stay inside the distribution. Sometimes you might get bounces outside. The data set always pulls back up inside of the distribution. Why? Because probabilities, because of math. That's why. So right now on the daily current candle, Solana's almost at the 95.4 Laplace. Right? And you go over here. Here's Solana. Here's the 95.4 Laplace right here, 1323, right? Boom, that's it right there. 13, well, I can't get right on it, but yeah, it's at 1323 right there, that little pink dot. So we got a lot of overlapping in between indicators, but there's a reason. So yeah, we're going to have to see what Solana does, for sure. Let me see something here. Let's get rid of, boom, all that.
The what do you call it? The PB2, yeah, does project on non-continuous markets, but it still needs some work to be kind of perfected so that there's no skipping dots in the first few candles. But you know, it still does work pretty well for the coming candles if you know how to read it.
Not from the current though. It won't do a projection.
No, not from the current. No, not from the current. You got to be back at least one candle or whatever, a couple candles.
And then you'll have little data setters.
Not from the very.
Let's put that right there. Okay. This is what's interesting. Let's see. Blow this up a little bit. Yeah, so you can see on this big down move, man. First thing, this candle pumps up pretty much right to the 95.4 Laplace. Oh, is this normal distribution? It is. I got the normal on. It's okay. It's okay. There's Laplace. But I like using both. But for this instance, I want to use normal Laplace distribution. There you are. Let's go over here. Nice little bearish doji to start on. Because this was going sideways. This is hard to know where to start this projection at. Yeah, look. When you come down here on the projection, literally got outside the 99.7 Laplace. What happens? And we see it time after time after time. You get outside the distribution, you're going to go sideways. The data set is going to pull back inside the distribution. Here is the power mean on the weekly on Solana. It's up here at almost 30 bucks, right? Watch this area. Watch for it. Look what happened last time. Went up, rejected off of the power mean. Started this whole move down. All right, boom. Pretty crazy. Now, obviously, this was the FTX debacle here. Literally brought Solana down from about 35, 40 bucks. To where it's at now. And we got this dip, the low, right? Got down to under $8. People that backed the truck up there, kudos to you, man. That's the thing with trading. Man, if you have conviction, you got a gut feeling, dude, look at the distribution, go with your gut. Go with the probabilities. It was a no-brainer. It was a no-brainer. It's not like, hey, there was a catastrophic event within the Solana ecosystem. The blockchain's been compromised. Yeah, by a fraudster, by a criminal who just decided to just wrap Solana up in it all, which is pretty sad. Because I'm a Solana backer for sure.
He didn't actually compromise the blockchain itself.
No.
He was just misusing funds. That's all.
Yeah, I said it wasn't like there was a compromise.
Right, exactly.
There wasn't one. Exactly. He got compromised by the fucking entire community got fucking hijacked by this crook.
A fraudster doing traditional fraudstering stuff, like regular wire fraud and stuff. Like
insanity.
Nothing to do with crypto, really. They just love to scapegoat it. So, it has a crypto exchange, so it's crypto's fault. No, it's not crypto's fault.
Right.
Blockchain's kept up with fine.
Go back onto this weekly. Let me pull this baby forward. I want to get on some lower time frames, get some good reads here. Let's get up on this first candle.
For people who are newer to crypto, who haven't been in it for multiple years or whatever, Bilbo's been in a long time. I've been in a long time. Like, I've been in cryptography for for decades and decades, but I've been into cryptography and cryptocurrency from the start. And it's whenever you hear all this crazy FUD about, everything's going to zero, it's like, usually that's a good time to be looking at, there's some good opportunities. Like, it just happens time and time and time again. Like, we hear it so often, crypto's dead. How many thousands of articles about Bitcoin being dead or Ethereum being dead or whatever? It's like, they're just written by people who don't have a clue about what is actually happening with these assets.
Right.
And anyway, whatever.
Okay.
Not news advice.
Let's see how this is flipped on. Let me see here. And I'm going to do this one more time. Then we're going to go over to traditional. Usually I would be there. I'm high on BONK right now. Solana. Oh, yeah. What kind of news? Any news? Yeah. Of course it is.
News. There's always news.
Oh.
Totally
Soul
not tradable, but it is news.
Soul up 20% in 2023 as Solana prepares to demolish SHIB and market cap top. Meanwhile, BONK. BONK's going to demolish both.
Yeah.
8-0 last night. I woke up and I looked at what my fucking BONK was worth and I was like, only in magical internet land, baby.
Yeah.
Only in magical internet land.
You look at the headline and you think to yourself, if you're a new trader, you're like, oh, look, they have a headline about this thing going up 20%. Okay, maybe it's run up 20%. Maybe you should be, if you're trading low time frame, maybe you should be taking profits and then buying back and taking profits and buying back.
Yeah.
Or buying and selling all the way up and down during the day. Like, a piece of news is by definition lagging information. If you're trying to trade news, you are trading old information that is already useless as a trader.
Yeah.
So that is just misinformation, 100%. Like, it may be entertaining, it may be filling your time with some kind of satisfaction about knowing that you're in an asset that's moving along, but it shouldn't affect how you run trades, 100%. It should be not that.
Right. So I showed this yesterday. Just the bull div, man. The bull div between price action and the returns oscillator. Bull div on the weekly, having an outlier on the Z-score. All the fishers are up. There was div on the DLP. Volatility expanding. Look at the APPs. They're getting jacked. The 981 turned back up. Hell, what's a 981 at? Fuck, 100 percentile right now. And you got the 525 creeping right up its back door as well. Here's another thing to look at. Look at the little plus distribution bands. Tight. This thing is just gearing up for a big move. Hey, direction? We're going to have to see what the overall market does. Or does Solana bust out of this bullshit and get back to where it should be while the rest of the market just chills? We're about to find out. So that's the weekly. Go down here on the 5-day. All right? Bull div with a nice bounce off the zero mean. All the fishers are up. 3-day. Bull div. All the fishers are up, right? And there is just the bull div on the Z-score log returns, right? On the DLP, let's see here. Price action's pretty random. Volatility is expanding, though. That's one thing about Solana. There's not a lot of history. Can't even get the correlation there. We're finally today. Got some correlation, right? Correlation broke right here. Here goes Solana moving to the top side. As volatility expands, the correlation broke, started heading positive again. Entropy percentile, the Shannon entropy percentile, right? The predictor, it flipped. Percentile is moving. All the fissures are up. And I've just been talking about all this bull div, man. It's everywhere. This was bound to happen with Solana. And that's on high time frames. All right, that's on high time frames. Now you can come down here on the 4 hour, right? Because we're getting this nice stair step action up to the top side. Z-score is pretty freaking high. We did set up some bear div here, right? With this little rejection on the zero mean. That's why there's a lot of buying going on right now. These algos are happy with fucking Solana. So we'll see. We're going to see, because you did print some bear div here with a rejection on the zero mean. Look at the returns oscillator. Solana's being really resilient right now. You see a DLP candle blow through these confidence intervals and just destroy this bear div that's setting up. I mean, look at the 4 hour entropy, man. It is trending. Volatility expanding. It's just a beautiful thing. It is a beautiful thing.
If you don't know how to read divs, grab our free div chart from our free tools.
Yeah. And here, the last big, 90-minute, man, look at that entropy. Damn, that thing just went boop, boop, coming down, went in the trend, pulling back up into randomness. Now, predictor flipped again right here on the 90-minute on this move. Got a lot of room here to go down to this 2SD band, for sure. Volatility fell off a cliff. Look, when volatility goes from a 72 to literally down here at a 0, you got to get prepared. Just like right here. What's going on? Well, it took a little bit, right? But boom, you finally get this big volatile move. Just like we're doing right now. And the correlation broke. So to the top side we go. Look at the 90-minute. Look at the wick. Right to the 99.7 Laplace up here. Pulled back. All right. There was a 99.7% chance this candle would not close above this band. And a 95.4% chance that this 90-minute candle closes below that band. Yeah. Excuse me. You give all this a little time and you study, it won't seem so foreign to you after a while. You got to put in the time, though. Got to put in the time. That's all. That's all.
Yeah, like anything else, we'll learn.
Yeah. Solana right now, though, man. Solana looks strong. So I'm going down through these time frames. Yeah, it looks real strong. Here's my favorite time frame, the old 33-minute. Tells you a lot. Let's see here. Yeah, and you can see right here locally, no bear div. No bear div. Damn. I didn't sleep well last night. Fucking dog took off. Up all night barking in the woods. I finally got him inside about 5 a.m. after I went to bed at like midnight. And he's out there barking. I barely slept. Of course, now he's out sleeping, snoring, and I'm up trying to drink a bunch of coffee. That's why if I sound a little whacked, I'm on no sleep. I am literally on no sleep. All right, that's enough. Bonk. Let's look at the bonk chart one more time. Just going sideways right here. Tell you what. They're fast tracking this thing too. You can view it on Coinbase. It's not tradable yet, but you can view the price on Coinbase, right? This thing probably going to get listed on these exchanges, and when it does, we'll be able to pull bonk charts up, see what the hell's going on.
Yeah, until then you can trade it what is on Orca and Radium. Basically.
Yeah, Orca, Radium, and also Jupiter. What else? I think that's the three. Orca, Radium, Jupiter. Yeah. Right? You can just pull up CoinMarketCap. Let's see here.
Yeah, it's listed on a few dozen. Yeah,
still in my search.
But I don't think it's tradable yet on most of them.
There's old bonk.
But yeah, if you look at the market volume on all those, the exchanges where it's actually traded right there on CoinMarketCap, you can see the exchange. Oh, there you go.
Oh, look. It made it on to, what is that exchange? Is that centralized? That MEXC? Did it already pop on a fucking is that a DEX?
I don't know.
It's trading with USDT, so I bet that is an exchange. Or a centralized.
Volume, for example, look at the volume on Orca. They're not showing the right data, obviously, there, because it's showing $0.
No. Yeah, which is not right. You can go on to Orca, and it's a lot.
Yeah, exactly.
It's a lot. It's like two... Well, What is it? Don't know. That ain't gonna tell me.
Yeah, it's definitely not zero.
No, it's
So there's
definitely
clearly
not
a-
zero. It was
a
more
data
than
error.
radium. It was over 2 million in volume like yesterday.
Yeah.
But yeah, you see, crazy. And I think it's already got listed on this exchange, whatever the hell. Here, why don't we find out? Whee! Where are we going? Assessment zone instructions. What?
MEX is regular centralized exchange.
Yeah, this is okay. So it's already on one centralized exchange. Very interesting indeed. K-Line, where in the hell is... Oh, and it just got listed. Jesus. I mean, literally, what is this on? 15-minute chart? It got listed this morning. Literally got listed this morning. 0600 hours Eastern Standard Time. And what's it do? Right to the top side. All right. Cool. So it's on one centralized exchange. Wait till this thing gets on freaking Binance or Coinbase or something. It's a meme token. We're in crypto. People love it. God knows what this thing could do. So I told people, don't fumble the bag, take your profits. I mean, for Christ's sake, look at my bonk. It's worth 206 SOL. You kidding me? What a fucking... You gotta love cryptocurrency, man. It's just stupid. Only in crypto you see a meteoric rise like this of a meme token on a blockchain that just literally got its legs cut out from under it by old SBF. Don't drop the soap, buddy. Don't drop the soap. Although, God, he'll probably just get house arrest or something stupid. I wouldn't doubt it at all. All right, what's going on with these traditional markets? We've had enough. Tesla just bleeding. And look what happened.
You could, if you have the right arbitrage position, you could definitely make a nice bank right now between MEXC and what is that other one? Bird Eye or something?
Yeah. Because all you can really do is you could swap in the SOL and then go over onto MEXC and then just you'd have to literally though sell your SOL in the USDT to buy BONK over there because there's not a SOL pair. It was just USDT.
Yeah, USDT. As I'm saying, and on the BONK and on the Bird Eye trade view, it's shown in BONK USD. You can look at BONK USD.
Right. Look at
USD.
So we just talked about this. Here's SPY. All right, here's a data set of SPY. It literally gapped up on the 4 hour, hit the 1 SD on the 4 hour, got a wick up to it. Now, what did I say about this daily and weekly range? It didn't get tested. Did it now? Yeah. Look at this 1 15-minute candle. Whoop! Right to the top side, just like I just said was probably going to happen. 381, 382. Went down to 381.65. Now it's rising again. These areas are literal magnets. And now, look at the micros. Look at the NASDAQ and the S&P micro E-minis, man. The futures. Right back down to where? Top of the weekly range. Top of the weekly range. You have to literally put a lot of distance between the data set and these macro volatility ranges, man, or they will come revisit them. 100%.
Yeah, and that same token, look what Dixie's doing now, right?
Yeah.
Took a little dump, and then boom, like right when the market started opened, and it fell a bit further, and now it went right below that monthly and weekly range area, and boom, shot right back up.
Right back up above.
Yep.
And look at Bitcoin. Where'd Bitcoin just wick right down to? After all this, I mean, look at this thing. Whoop! Right back down to that tight daily, top of the weekly range.
Yeah. Perfect.
Yeah, man.
Really perfect.
Very.
I mean, that's how to trade that, and it was a nice trending move. You had a nice trending move to the upside in the last few candles when it was rising, and then it petered out. It went to no correlation, and the trending move continued. So no correlation means it's going to drop, and it sure did. And it dropped very nicely, right to a target area.
Sure enough.
Yep.
Oh boy.
And then you got that trending move turning around and heading back south. Maybe it'll end the trending move now, or maybe it'll continue it, but it's got no correlation right now. If anything, it's super weak correlation, and it's negative if anything. So
right,
not exactly a move to the upside the way it's looking right now. But it could rise up a little bit from here, but trending move to the downside, if anything, until that runs out of steam and goes back into randomness.
Well, look at the micro on crude futures. Wow, right back up.
I love our entropy indicator. That thing is amazing.
Entropy for life.
Yeah, and also variance, right? Look at variance. A perfect example, again, on the 15-minute of like Bitcoin, what Bilbo was showing you earlier with the variance indicator. When you look at the 15-minute on Bitcoin, like a fat outlier, very nice on the 15-minute, right on that trending move, which happened, and it went all the way up to like an 8+ standard deviation, and the price sure dropped, right? I mean, not an accident that we use these tools, and they are accurate as they are.
The predictor flip right on this candle right here. Now, obviously, it's going to, once this candle opened, then you were going to see that. So it's not like you could have front run that move. But yeah, man, look at the volatility. Crashed. Not a drop off the cliff, really. But look when it expanded again. The correlation broke negative. All right. And when you have volatility expansion and it's negatively correlated to price action, the data set's going to move to the downside. If this correlation is, say this was negative here and it broke to the top side, you would see Bitcoin up here, like I said earlier, around 17K probably. Instead, it did the exact opposite, dropped a couple hundred. So what are you going to do? That's Bitcoin for you. That is Bitcoin for you. No div, all the fishers down. But yeah, it's a 15-minute. Probably outlier on every freaking low time frame for sure. Look at that volatility, right? On the 90-minute, or on the 33-minute was totally zapped. Totally zapped. Correlation just stair-stepping down. And right when you had expansion, man, it got significantly negatively correlated. Big time. Started going into trend immediately, too. You don't see that a lot. You usually see a nice, steady, like right here, right? And then we're starting to trend, getting into blue. Man, that thing was just like, all right, let's trend. Fuck it. Fishers are kind of tight, all down. Yep. Interesting. Yeah, all these low time frames having this outlier to the downside. And you can see right here, I mean, the projections even started in the right spot. Boom, there it is, outlier, right to the 95 for Laplace. Good deal. Good deal. Especially when you're down here trading these low time frames. Man, these are powerful indicators, right? Because you're scalping that volatility. That's all you're doing. You're not swing trading. You're not getting into these long-term trades. You're literally in and out of a trade, usually within a 15-minute candle. All right? Down here trading 3-minute, 6-minute. For those that like to live on the edge, the 1 minute. If you can't successfully scalp on a 15-minute, right? Get in entries and exits on a 15 and maybe be in that trade for like a 1 hour candle, don't even dare come down here. This will eat you alive. If you can't do it on the 15, don't come down here into the 6, the 3, the 1, or whatever, the 1, the 5, the 10, whatever time frames you use. People ask me, those are strange time frames. Why do you use those time frames? Right? Well, number one, everything I do is based on the 369 philosophy laid forth by Nikola Tesla, which it's not like he created it. I mean, it was out there. It's all math, man. Again, it's all math. And that's why I use this. And then people say, why do you use it? Well, because you're not. And because you're on the other side of my trades. That's why. I use the 9-minute, 6-minute, 3-minute because most people don't. Right? Most people don't understand math when it comes to trading.
Right. The 1 minute, I think, is extremely useful to learn, at least to learn, without learning trades. Just to learn, because you could see the things happening quickly, or look at it on the 3-minute or the 5-minute or the 10-minute. You know, get a sense of how these things are moving, and the lower the time frame you go, the faster you can see those things moving.
Yeah.
If you're adept at making, and understanding the probabilities and how they're moving along, you can really get a good sense very quickly of how they're moving when they're on low time frames, as opposed to looking at it on a daily or a 4-hour, which will take obviously a longer time for things to happen. And when you're on the super low time frames, you get a sense of how accurate these things are, even down on the very low time frames. So, I mean, that's why I like the 1 minute, obviously, not only because, it's just, I find it extremely convenient when you don't have a lot of time when you're super busy, let's say doing other stuff or whatever.
Yeah.
Or when you just want to get in and out of trades quickly. But yeah, like Bilbo said, man, if you can't run trades on the 15 minutes safely, don't even attempt to run a trade on the 1 minute. But to learn on it, I think it's a fantastic learning tool.
And so if you're down here on the 1 minute, what are you immediately noticing? And this is why I have volatility. I want to see when it drops off a cliff, correlation break, volatility expansion, down we go.
Yeah.
But look right now, volatility's pretty crushed. Entropy, look at entropy, ran all the way back up to randomness as this thing was going sideways here. Got a bunch of bull. You had bull divs setting up over here on the log return z-score, on the returns oscillator, the DLP. All right. So what's going to happen here? You want to know? Look, volatility's starting to expand. Correlation broke right here. When entropy goes back into randomness, right? It's going to start to gonna trend. That's what entropy does. Randomness into trend back into randomness, blah blah blah. Just like volatility expansion and contraction, all this works together. When you learn how to read it, it's a whole new ball game when you're out here. Number one, because you are finally on the right side. What is the right side? You're on the right side of the algos that are moving these markets. That's where you're on the right side, and that's where you want to be. You don't want to be chasing. You want to be able to recognize what the returns are doing.
And it's very simple to know. Like you say, how do you know you're on the right side if you're running with the algos? Well, think about it. These algos are being run by, like Bill said earlier in this live stream, they're being run by the high-frequency trading firms. It's in the name. They are high-frequency trading firms. They are moving orders of millions per order, right? And they're moving. You can just look at the order books, like 60, 70, 80% of the trades on any given day, on any given asset, on any given market. You can just look at it straight up, right? And they're moving, literally, their orders are executing millions of orders per second on their algorithms. There's no retail trader doing that, right? Like, you can have the fanciest retail algo available to you on whatever site they want to shill to you and say, oh, our automated trading system lets you run, automatic trades, just like the big firms do. No, they don't. You can't pay $50 or $100 or even $1,000 a month to have a competitive algorithm with that of the massive firms. You just can't. Like, they spend hundreds of millions a year on their algorithms at this point, probably more, just maintaining them and building them and staffing them and all that stuff. So the right side of the trade is the side of the trades that are moving the whole market. And it's very easily provable. Just look at the order flow. And you can see what the right side of the trade is, and you'll understand, okay, so the probabilities, which is what those algorithms are running, they're running the same mathematics that we're using. We're just running our trades manually, but we're using the same concepts and the same maths. So it doesn't really matter if you're trading 15 minutes or 1 minute or 1 hour trades. You're going to be on the right side mathematically of trades. So your probability is higher. Your degree of certainty is higher to be on the correct side of the trade. And if they weren't, we wouldn't be using these tools to trade. I think we would be using something else or whatever they're doing.
Yeah. So, if I didn't have these tools, I'd literally be throwing darts at a dartboard. You're better off doing that. Check it out. If you don't understand the distribution and the returns, and you're trying to use some traditional TA out there, moving averages, RSI, all that stuff, that's all lagging. Why is it lagging? Where is it getting its information from? Price action. Price action lags behind the returns. That's why people are like, well, why do you say those lag? Because they do. They're based on price action. Price action follows returns. That's why you need indicators built on the returns, on distribution, on entropy, on volatility, all these things. And from what I'm seeing right now, Solana's breaking correlation. Solana's breaking correlation with the crypto market, man. It's pretty interesting what's happened. Look at Solana going up. Bitcoin's going down. I mean, it's just like, wow. Which I like it because I'm a Solana backer, man. It's a great blockchain. I'm going to be here. I'm not going anywhere. I'm not fucking leaving. Is that what they say? Yes. Yeah. Yeah, Siege. It is only on Pro.
Alex now 5 days late.
Oh, you know what? No, I don't think so. No, it's not just on Pro. And here, let me show you. So it's what you do. Whoops. I guess it doesn't matter what I'm on. Blah, 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 blah. So go up here. right on the right side of the ones that you have, your favorites, right? Your times. Click on this. Boom. It opens up all the way at the bottom. All the way at the bottom. Now, what you can't do, this is what's not in, this is what you get for pro. You get down here in massive algo land, right? 30-second chart, 15-second chart, 10-second chart. But besides that, you should be able to set them up. You just come down here. What do you want? You want to set up months, weeks, days, hours, minutes, right? So if you want to do a minute, boom, you put a minute there. Come over here, put a 3-minute, boom, add. That's all you got to do. Pretty easy. Yep. Because, yeah, it's good time frames. God, giving away all the secrets. It's okay. That's what we're here. We are definitely for the people. It's hard out here, man. It is hard. That's why we do what we do. Hey, I don't know if everybody thinks we're being compensated to do this. Got a news flash for you. We're not. We do this because we love to do it. We're trying to save one trader at a time. People have lost so much money in these crypto markets, and we don't want people to leave, right? We want people to stay in crypto, not just get discouraged and be like, oh, crypto's a scam. Like this morning. I mean, I love Tasty Trade, but I'm listening to Vanetta talk, and Vanetta's like, no, I'm not down with crypto. It's just not safe. Your funds will get stolen. And then I put in the chat, I'm like, it's really surprising how somebody that doesn't understand what cryptocurrency is going to gaslight people and tell them that cryptocurrency isn't safe, right? I was like, look, you are your own bank. If you know how to secure your own bank, you are fine. People don't get hacked. They get scammed. I see it every day, people getting scammed. Cryptocurrency is very secure. Good Lord. Right, Yasha? You know.
Yep.
It's very secure. You should definitely have a ledger. Look, and I try to, people just think I'm just this mean guy or whatever, because I'm like, don't want anybody in my DMs. I tell people, there's no reason ever you need to be conversing with people you don't know in your DMs, because I got a newsflash for you. You will get socially engineered. These people are good at what they do, man. They will befriend you for months. Make you think that you're the best buds. And then they'll be like, hey, you want to do a trade or something. Then they'll throw a fake link up, some bullshit. Hey, let's go trade here. Let's go do this. You click, boom, your wallet's drained, man.
Yep.
You got to be careful. Don't trust anybody. Don't even trust me.
Exactly. There's a reason we don't DM you first.
Yes, never. You will never get a DM from one of us. Ever.
Unless you're already one of our contacts, or you've been in our group for a while, and you know us and we DM you, and you DM us and we DM you back. We're not going to DM you first.
100%.
The whole thing. And I mean, look, crypto is amazing. Blockchain tech is amazing for what it can do. It's not the be-all and end-all of everything. It's not some religion. It's not something you have to be, you don't have to join an occult to love it or whatever. It's just a technology, but it's a great technology for what it does, right? Which is to enable the transparent and verifiable accounting of assets and the transfer of values across networks, that's what blockchain and cryptocurrency do. And so the technology is extremely strong on good blockchains. There are all kinds of blockchains that have different governance and everything else where the security may be lacking compared to the stronger networks. And that's why you have to be careful about the ones you put your time and effort into. And not just randomly jump on every idiotic thing that comes along, frankly. You have to be careful not to do silly things with this is real money, right? Like people say, oh, it has no value. Crypto has no value. Really? Because as far as I know, you can take profit on BONK or Solana or, Bitcoin or Ethereum or, XLM or XRP, or you can take real profits from those things and convert them into dollars, right? Or euros or whatever your fiat is of choice, or into other cryptos that you think are, also good. They definitely have value. People that trash talk that they say they don't have value are usually butthurt because they missed the boat, or they just don't understand it properly. And that is the bottom line. I can talk the ears off of somebody who doesn't really get it and who just wants to fund this tech. It is absolutely of real value. And, people say, oh, digital assets don't have any value. Really? Because last time I checked, Google is a digital asset. YouTube is a digital asset. Facebook is a digital asset. Snapchat is a digital asset. Those things trade on real markets, traditional markets, and they're considered real assets, right? And even hardware devices like Apple or Samsung, they are hardware devices that use digital networks. And without those digital networks, those hardware devices would be effectively useless. So to say that digital assets don't have real value is a real joke. And it's a joke that unfortunately misinforms people who are going to miss the boat in the coming decades because they didn't take advantage of this opportunity, which is, staring you in the face and making it eminently clear that these assets are not going away. They're not just going to disappear because of a bit of bad news, right? Major investors, major investment banks, governments are putting their money and their backing behind these things, and the ones that are still trying to regulate it, they're doing it because they know it's the future. If they didn't think it's the future, why would they bother to regulate it? Right? I mean, did they regulate Blu-ray DVDs? No. Where are Blu-ray DVDs today? Does anybody still use those things? I don't know. Right. But does anybody still buy CDs for their computer to burn information onto a CD? No. Why is that? And that's just another means of exchanging information. And it's a digital means of exchanging information. But why didn't they regulate the production of CDs the way that they want to regulate crypto assets? Because there's no benefit to the government, right, in doing that. Yeah, they have standards for it in production, sure, but they don't have regulation about taking a piece of the pie necessarily any more than the usual things, because it's not a special asset. It's just a regular media asset, right?
Yeah.
The cryptocurrencies are the value. It's an exchange of value across networks. That is, for the first 40 years of the internet, right, since the late 60s until the early, until 2008 when Bitcoin came out, the end of 2008, started 2009,
I'm playing.
The web and the internet was about exchanging what? Information. Okay, great. That's wonderful, but it's not the exchange of assets online in a verifiable database that is verifiable in a decentralized way, meaning 3 or more, ledgers looking at the same information and saying, yes, this is accurate. And that's all the blockchain does, right? Is it lets you verify that this is at least on 3 different accounting spreadsheets, basically saying, yeah, this is correct. And the more spreadsheets you have, the more secure it is, because the harder it is to run a 51% attack. But yeah, like cryptocurrencies are very real. Digital assets are very real. It is the future, whether you like it or not. So you may as well learn about it, especially if you're a trader. Yeah, there you have it.
Bonk to the moon.
To the moon. Bonk.
Now I'm just playing.
A meme coin.
Oh boy. What are we gonna do? I'm about to wrap it up. That's what we're about to do, man. That's a great thumbnail too, by the way. Got the alphas in on the bonk. I saw that, just started laughing. I was like, nice.
Yeah.
Nice thumbnail. But yeah, didn't really go over a lot in traditional markets, obviously, today, but you can see there's a lot of sell pressure right now. Got the, you know what, though? This dollar has been on the struggle bus. It did get above the weekly, though. It hadn't been able to do this for almost a month, these weekly ranges. It pumped right up through it. Now, I thought on this move down, you get back in this weekly range, it could get down below, but it's looking like it likes it above the center of this monthly. We'll see. And for traditional markets, it really matters, right? There's strength in the dollar. You're going to see a lot of these risky assets, especially like these micro minis, man. They're going to dump. Going to dump hard. So yeah, keep an eye on the charts. If you are in on BONK, like there's people asking, oh, should I hold? Should I do this? Dude, take some profit, man. That's what trading's all about. It's about your profit and loss. If you're not taking profit, you'll never be profitable. It was a free airdrop. If you haven't taken some profit yet, I mean, come on, man. It is a meme token. It's looking like it's got a jetpack strapped to its ass at the moment, but you never know, man. BONK could just crash like crazy. It already had a nice little pullback. But man, there's some steam behind this. The Solana community is definitely rallying behind Solana and BONK and, yeah, man, crypto in general. And going out saying the last thing, crypto is safe. Don't listen to these people, the old wall media, and just people that don't even understand. Like, how dare somebody that doesn't even understand cryptography, cryptocurrency in general, is going to sit there and say that it is not safe? It's the safest thing there is. You just got very unsafe people using it that don't understand what it means to be your own bank. That's the problem. And that is a barrier with adoption too at the moment. That's why, right? That's why people are just waiting, right? They want somebody to manage their crypto for them, right? They want somebody to be the custodian. What? You have an opportunity to be your own bank. These same people that bash the banking system and talk shit all the time, but then they want somebody to be a custodian of their cryptocurrency. Click, click, boom. What in the hell are you talking about? Right? It's just insane. Learn how to secure your funds. Get a hardware wallet, right? You get a hardware wallet, smooth sailing. But you still got to be safe. Don't let yourself get socially engineered. Stop letting people in your direct messages, right? Because there's a high probability that person is trying to scam you, especially if you don't know them, right? Now, if it's friends, yeah, go for it. We all talk in DMs. But all of a sudden, if you get a friend request on Discord from somebody you don't know, get rid of it immediately. Don't even accept it. Move along. It doesn't matter.
If you had a stack of any asset, you shouldn't have it on just one wallet, right? You should split it up between a couple of different hardware wallets if you have a significant stack. And, you know, I never tell anybody about it, never show it off to anybody. That's just, you know, you're just asking for trouble. It's like, here's my shiny gold bars. Why would you ever do that, right?
Yeah, because then the attack is on. They're going to be trying to scam you. For sure, 100%.
And if you split up your assets between multiple wallets, and if you have a significant amount, whatever's significant to you, because that's relative to everybody, you know, decide for yourself, how much should I safely keep on any given wallet? Is it a couple thousand? Is it a couple 100,000? Is it a couple million? Whatever the number is for you. You know, hardware wallets these days are $100 or less, you know, for a hardware wallet, for a good one. And you should not be keeping more than you can afford to lose on any one hardware wallet, just in the sense of you don't want anything ever untoward to happen to your assets. But those are solid wallets if they're from good manufacturers, right? And as long as you keep them properly secured, and that means a whole variety of things that you need to learn how to do, but you know, it's worth it, and it can change your life, man. What can I say? It can be life-changing situation in a good way if you do it right. Absolutely.
Yep, big time.
Yeah.
All right, so yeah,
anyway,
let's get back at it tomorrow morning, 9 a.m. Eastern Standard Time. We're probably going to focus a lot more on the traditional markets. Let today play out, right? Just come in. It's right first week of the new year in traditional markets. You're watching this down move right now. Be really careful. Be real careful if you're trading the traditional markets, because this is pretty predictable that this was going to happen. But from everything I've been looking at, especially on macro, be prepared. Be prepared. Yep. Wherever you live out on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. See you tomorrow morning. Bye, guys.